What is going on YouTube? It's Brendan from Market Makers. Big Thursday video for you today, boys and girls. Lot to talk about. Powell's out there jawboning, saying the job's not done for the Fed. More rate hikes are coming. As you know, the vast majority of the Fed, according to Powell, favors at least 2 more rate hikes this year. The next one would be coming in July. Bitcoin fell to our Wyckoff ceiling. We have been showing this multiple videos now on the 3-day chart. We traded this pump in the room. We traded the S&P retracement, almost 100 handles now. We got to go over the indices, look at Bitcoin. The title of this video is Market Tops because the first part of key topping structure has been put into place. We need to go over the steps that need to occur for Bitcoin to flip its top and move up, for the indices to flip their potential tops and move up. And of course, we have to go over the metals. We haven't done that in a couple of videos, and our shorts are in excellent profits in the metals. And we're going to go over some key big stocks, the big tech stocks, because Tesla as well hit our price target, our topping target, and then fell $20. And now that's putting in what could be a topping structure as well. So lots to cover in this video. Please do like and subscribe. Let's kick it off with Bitcoin. All right, guys. So my last few videos we've been talking about, and again, this is without fibs. Okay, this is just pure Wyckoff. Without fibs, we had this descent coming down the whole way down. I said we can come down, retest the ceiling of Wyckoff, and surely we did. 24,930 got just below it, a hair below it, got this nice pump up. One of our traders on staff, a guy I've been trading with for years, Marbob, his name is Mark, but he posted the trade for this. And guys, I just want to show you, Lee, throw up the comment real quick. The guys that took this trade are very, very happy. Here's one of the comments. Wow, that was the longest I ever held a trade, and it wasn't even 2 weeks, and it was much less stress. My boss is knocking on the bathroom door, and I made the most I have ever made in one trade. Thank you very much. What you guys see on my YouTube, because this is free to everybody, is about 20% of what we do in the room. We have a staff of traders, moderators. It's a professional team, thousands of community members there on our Discord. We trade everything. We trade up, we trade down. I talk about macro on my channel and share some of my trades with you as well. But if you want to trade meme coins, if you want to go long on certain assets, we have a PayPal long that's up 15, 18% from where it was posted as well. We have a lot of different trades going on from our key traders in the room. You guys should check it out because it's free to join. Check out BingX if you want to trade all the cryptos. Check out SimpleFX if you want to trade all the assets and about 20 cryptos there as well, all the big ones, including Bitcoin, obviously. But if you want to trade the equities, commodities, Forex, you can check out SimpleFX. All that info is in the video description. Just message Lee in the Telegram, and he will get you into the Discord with your first month totally free. You get all of our indicators as well when you do join, and you can see all the trades happening in the Discord. All right, so let's go ahead and get into Bitcoin. Like I said, Mark posted the long down here. Got this nice move up. So why am I saying this is a potential top? Because this is classic Wyckoff, what you have right now. Remember, we talk about this in all the videos. When you get on top of Wyckoff, you get your Livermore pivot that forms. You retest your base, and then your pivot to the upside determines if you're going to have more upside potential or if you're going to double top out, make some type of bearish structure, and then return back down into here, okay? So we're going to look at this a couple of different ways. You know, we can even count this with waves. I don't trade with Elliott wave theory, as you guys know. I'm a natural law trader, meaning I use esoteric Fibonacci techniques and I use Fibonacci fractals to count my waves. So one thing I can do, and I'll show you guys how I do this here. If we just look at the fractal low here on this move to a fractal high, doing a wave count here to a fractal low, to a fractal high, to a fractal low. And where will this fifth wave go? It could stop right where it is now. It could go higher. Again, not using the Prechter and Frost rules. That's not actual Elliott wave theory. That's their basis for how to trade Elliott wave theory. RN Elliott obviously has Elliott wave theory, and I'm using Fibonacci fractals to place my waves. Okay, I want to show you something though. So let's just look at this 5-wave count. So you're not going to have all those rules in place, all right? I've showed you the Gann law of 3 pattern. This is my own type of pattern, how I trade with waves if I do want to use these for confluence. But let's just look at this. Let's just look at compare the accuracy here of how this would play out, because I'm always looking for the golden ratio. I'm going to go to my fractal high and bring this back to my impulsive moves. It's all part of understanding Robert Fisher, understanding Bryce Gilmore, understanding Bill Williams with fractals. I marry a lot of different techniques together. Your 1618 30,823 off of our projection. You hit it here on your move up. You got to 31,040. And the wave 5, of course, came right back up to it, 30,823. Using our chameleon oscillator here for momentum, typically when I'm doing my Fibonacci fractals, my wave count, I'm looking at the largest momentum for the wave, which is what we have here. And some other confluence. So where else could this go? If this fifth wave wants to go higher, I have 34,768. I have 39,788. Again, not adhering to the traditional Elliott wave rules developed by Prechter and Frost. I got to keep saying that because every single video I get people saying that's not how you do Elliott wave. I know. I don't like Elliott wave the way they wrote it. I don't think it works very well. I think it's extremely subjective. I think it's how you get people with 250K Bitcoin videos and other people with 10K Bitcoin videos looking at the same chart. So I'm using Fibonacci fractals as my method here, okay? So this is what I'm looking at, guys. Another way I can get confluence for this is sequencing. You guys see me do this all the time. This is part of natural law trading. If we're going to look at a wave up, let's just take the high or the absolute low, the Fibonacci fractal low here, 60, let's just call it 63%, 64%, and then get the next wave up to the next high, 58% for that wave 3. And where's this wave at right now? This wave is at 24.78%. If we came up to 34,768, that's a 40% move. But wait, there's more. If we come up to the 2618 to 39,788, that gets you back into symmetry. As a geometric trader, we care more about market symmetry than we do rules-based analysis of wave formations. So you have essentially 3, I bet you if I did a geometric mean of this, it probably comes out to just about 60, 61%. So you have 3 waves that would be all roughly 60% moves. That would take you up to 39,788. And if you look at the retracements as well, your wave 1 to 2, 22%, almost 23% down move. And off your wave 3 to 4, this is a 20% down move. So the question really is what does Bitcoin have to do to bring this wave up higher? What would Bitcoin have to do to come up to, say, 34 or to come up to the, say, 2618 at 39,788 and give you market symmetry with wave movements? Well, it has to flip this current area of resistance. Let's remove this now. If you're looking at this, and essentially you're just going to Wyckoff this in, right? You can see it between the 1618 and your 1 fib already. That's your Wyckoff range. Just like you did on top of your previous Wyckoff range, what Bitcoin has to do is it will come up, pull back at some level, and then sprint back out. So it would have to break this fractal high here. It has to get above essentially the 1618, 30,823, hold it for support in Wyckoff terms, and pivot out to the upside. Then I'm looking at 34,768, or then I'm looking at 39,788. You know what else has to happen? You have to have the continuous moves up in the equity market, because I use Bitcoin basically as a measure of liquidity. The equity markets all pushed up. They all went over 3 ATRs or 5 ATRs and Tesla alone from the mean. Okay, so they all pushed up. They're all retracing some. We're going to look at those, but that's the upside potential move. The downside, the bearish potential here is what we've been talking about as well. What my expectation is potentially a large double top formation if this fails to break your 30,823. And then you'd be coming back into your trading range. And this will happen if the equities come back up off this retracement, make a lower high, and start to break down. Okay. So upside targets 34,768, 2618, 39,788. And again, guys, could have traded this in our room with the post-it trades. You guys can check out the room. All the trades are there. Okay. So you can check out the room and see it on the Discord, and you could have caught this nice pump up as well. So what I'm looking for here, if I zoom into the smaller time frame, what I'm looking for here on the 1 hour, you can see the bias. Here's I carry over my fibs. There's your one fib, 31040, 786, 29,695, 29,695. And you can see price just making shapes. So we start coming up, making your higher lows, traditional TA that you can find anywhere on YouTube. You can do your traditional TA, but I want to see a break above that 31, hold it for support, and move up. Okay, maybe you get a double bottom structure, something to move you up. Then that's a bullish move for Bitcoin. Conversely, if you start making lower lows or lower highs, I should say, and again, this is a 1 hour time frame, you can go out to the 4 hour, 8 hour, wherever you like to trade. But if this starts descending and you start finding the 786 at 29,695 as resistance, again, just it's all it is Wyckoff, guys. You come down, you retest it, you back test it, and you fail, you pivot out, your Livermore pivot to the downside. That's your trigger. And then you can trade that short as well. And you want to do this confluence with the markets and your various indicators, oscillators, whatever you like to use. But that's what we're looking at right now. Just chop in the 1 hour. You look at this on another time frame, the 4 hour, just chop in the 4 hour. You can zoom out. I carry over my fibs from my larger structures for trading. Let's jump over to the DXY. DXY, yeah, a little bit of a pump, I guess you could say. It's at 102 spot 425. Where could the DXY fall to? Let's just grab this as well, get this impulsive move. And you fell right to the 786 at 101 spot 961. 101 spot 215 would be your next downward move. Again, if you do get this upward trajectory, look for 104, 105, 105 spot 917 would be the target in a symmetrical move. Let's look at the VIX. VIX is still dropping 13 spot 31. Bloomberg did an article, a news alert I got on my phone last night. Just wanted to share it with you, but oh, go ahead and throw that up, Lee. Big bets against the market, $1 trillion that the market's topped out. So, there's this constant battle of bulls and bears, but to me, you see it in the price action. 3-day chart, couple of things to talk about here. S&P. Broader market, 500 companies. Looking at the S&P, where could the S&P get to? Well, this is our geometric Gartley. Again, geometric concepts, guys, 44.15. 44.15, we got up to 44.52. And of course, we posted a trade. I posted this trade on our Discord, and we got a nice almost 100 handle drop on that trade. We'll look at it on the pivot pattern because once again, the pivot pattern played out for this trade. So 44.15. My next key resistance is up higher. If you pull a fib retracement, you can see here the 1272 is almost 4,600, right? And you can see here on the 3-day chart, you came down. We're going to look at this in the daily. If you come back up, this is a key area of resistance. You flip this and you move up, much like with Bitcoin, you can have more upside. But really, if you want to look at a key area, and this is the next key area up, I would be checking grab from the all-time high, guys. Just a simple fib retracement down to your market low. Your 786 is at 45.35, okay? So you flip that 44.15 that we got to where we triggered our retracement. Next level up would be 45.35. But again, the problem that you have in the S&P is you have no volume. You have a basket of stocks, 7 to 10 stocks, claiming 80 to 90% of this rally. Okay. And you can see it in the volume. Again, we kill this every video, not going to go over it. Volume waves lower and lower this whole rally up 60% less volume than the same amount of bars on the rally to the all-time high. How'd the pivot pattern play out? Pivot pattern played out beautiful. We hit our pivot on June 14th. Next candle went up a little bit. Next candle a tiny bit higher. Then boom, we got a nice almost 100 handles sell off. I believe 97 handles. I traded this. I shorted this at 44.42 in the room. Posted that trade, and we got this nice move down. And this is what you want to see. This is the first part of your topping structure. You found key resistance 44.15. You got above it. Retrace back below. You're getting what Japanese candlestick traders, which was my first trading method, would call a doji right here. We'll see how this forms. And you want to see your retest. This is what Bitcoin's doing a step ahead right now, retesting that previous high, okay, your local high. You want to see a retest. Do you fail at 44.15? Do you come up and take out that high? That's what you need to see. Okay, we're going to look at this, of course, on a clean chart. So pivot pattern played out great. We'll see if this pivot pattern brings us a bearish structure like a macro double top that breaks down even further. Okay, so here's your 44.15. Here's your doji as of right now. You got above your Wyckoff structure. Let me zoom this in some so you can see this on the daily time frame. Where could this get to? Well, let's just take a simple fib retracement from the top here to the base. And the 618 lines up perfectly on the fib retracement with 44.15. So this tells me 44.15, this would be a retest on this pattern, okay? Another way to look at this, let me jump back here to the 3-day chart. Geometric Gartley, okay? It's a geometric pattern. This is not a harmonic Gartley. This is a geometric Gartley. But this geometric Gartley formed like this, and it had its target at 44.15. So it came right up here to 44.15, right there. Take away that fib retracement because I measure this with my trend-based fib, okay? Symmetrical moves in the marketplace. Boom. That was our target. So this is exactly why we trade it here, okay? That's on the 3-day chart. Going back here. So that same target, 44.15, is your 618 on your retracement, the most commonly retraced to fib in a 20 or 30-year database market study of the S&P, okay? It's the most commonly retraced to fib. Doesn't mean it can go above it. Of course it can go above it. Markets are dynamic, guys. The narrative shifts all the time in the marketplace. You get a dovish Powell, markets want to rally. You get a hawkish Powell, hawkish statements, you get rate hikes, markets want to retrace. These things will shift the market. Not being married to your narrative is very important. Trading the marketplace. Do I think a new low is incoming? 100%. Talk about this extensively every single video. Yet I always try to be kind and re-explain it to people that don't watch the videos very often, apparently, in the comments. The markets have never bottomed in history while the Fed is raising rates. Your October bottom has had subsequent rate hikes. The markets have never bottomed in history. The markets have never bottomed in history before a recession. The recession has not hit yet. Could be in the recession right now, but they've never bottomed in history before a recession. Keep that in mind. These are the two biggest data points you need to understand. You can have bear market rallies, 60+%, like in the 1970s bubble. You can have bear market rallies, 6 of them plus 20%, just like in the dot-com bubble. That's what we have now. Understand that. That's the macro. The micro is the narrative shifting, the trend trading. That's what you need to understand so you can trade both sides of the market and capitalize to build your wealth. My macro view is long-term bearish. Short-term, you're looking at pumps, and I'm looking for areas to trade these pumps. And of course, you can trade pumps at the base, and you can short pumps at the tops and get retracements. There's more than one way to trade the market. Not everybody hodls, okay? You do not trade shorts the way you hodl longs. You trade shorts, you get targets, you get out, you stack profit. I find it more enjoyable to trade trade that way, by the way. The other way is pretty boring in a long-term bull market like we've had the secular bull market. But this is what I'm looking at, guys. So retracement back up to 44.15, key resistance level, then 44.31. And then, of course, whether or not you can take out that high of 44.50, that's going to determine when you come back up. That's going to determine if you can flip it, pivot out, get up to 45.35 would be my next key level of resistance, okay? And I can express this to you just like this and just throw this in a little mini daily Wyckoff here, okay? Just throw it like that. That's what you need to do, that exact pivot out to the upside. If you fail anywhere in resistance here and come back down with the bias of the other markets as well, you got overbought here on the daily time frame. Has not happened since the all-time high. Momentum is rolling down as well. So we'll see. This is exactly what you want to see, though, for a rebound back up. This is the BTFD boys stepping, and they're like, no, I must have my Peloton. I must have my Palantir. You guys don't understand. You bears suck. So this is what's going to happen. If we can get this momentum up, watch for these failure points. Okay, guys, let's go ahead and bounce over to the S&P on the 1 hour. Looking at this in a smaller time frame, just to encapsulate this for you. Traded up here at the white trigger, 44.44. Okay, captured all of this in a single trade in what is now what? 3 days of trading, 3 trading days. So this has been fantastic to capture this move. And of course, when you start getting a trending market, which we can cover in some other video, you can keep building into these trades. And before you know it, you have a massive position all in profit. And that's how you build long-term wealth. So that's the 1 hour. Let's look at gold because, man, the gold bulls have had this market cycle wrong since the beginning. Yes, you get pumps, okay? And I get gold people mad at me. I am equal opportunity for hating me, hating this channel, hating my TA. But we shorted up here at 2058. 2058. We shorted up here. Look at this decline. You're at 1916. I think you're obviously coming down to the 618 at 1909. So this is an excellent, excellent drop. Basically $150 in profit when you get to this move here. This is awesome money, guys. That's a 7.5% move, 154 handles right now on gold. And this was so predictable. Some channel I was watching, Mark and I were joking about this. They were talking about as we spiked up here, I want to add up here. I'm going to add above 2,000 because I got gold going to 2,500. I told you it's possible, but if you zoom out and understand the market cycle and look at things longer term, above 2058, you get these nice 15, 20% drops. If you study the GFC cycle, I am a cycle trader as well, plays heavily into my thought process. Gold went down 34%, Fibonacci. Silver went down 61%, expressed as a Fibonacci number as well. Well, Fibonacci retracement, 61.8 feet. So this is what I'm looking at, guys. I'm still expecting to see if we get this move, or waiting to see if we get this move. We got our spike. Here's your sell-off down. Here's your move back up, and then you get the sell-off. We got this dump, and this dump looks dramatic, but let's measure it. Let's sequence it real quick. If we get the move back up, then I'm looking for the sell-off. Why? Because double tops are nothing more than a law of 3 pattern. How do you say law of 3? Because you get an impulse up, your move down, your move up, and then you get your dump, okay? It's an ABC move. That's what a double top is. Law of 3 is prevalent everywhere in the marketplace. 3 candlestick reversals, head and shoulders patterns, double tops, lots of law of 3 patterns, ABC corrections obviously as well, but that's all a double top is. So you got your A, your B, and what I'm saying for people that don't understand because I drank a lot of caffeine, let's look at this. Where is it? God, there it is. Here's your impulse. Okay, there's your price, there's your move up. This is your first, this is your A, your B. I'm looking for the C. Okay, this is a dragon pattern. This is a traditional Gartley pattern as well. I'm looking for a C, a move back up to fail to get the larger retracement move. This is also an excellent re-entry point if you see the market the same way I see it, or if your technical indicators or oscillators tell you to trade this way. Okay, and that's the whole key is you got to see what happens when you get there. But as of right now, you want to hold 618. You start losing this 618, guys, in Fibonacci trading. You lose a 618. 618, your bias is going to be to go to the 1 fib at 1811. And yes, you have key retracement levels along the way where you could bounce from. 786, 1866 is the next one that I care about, okay? So you lose 1909, I'm looking at 1866 and then 1811. If you bounce off this, watch for this move. It's how you build wealth. Let's look at the indicators real quick. We'll check out silver. Again, you had bearish divergence on the paper in the marketplace, and you still got room to move down. If you want to come down and test the bottom of this trend exhaustion line, you got room to come down. You got to see if 1909 holds. And I do think, as I've said repeatedly, I always got to put an asterisk. It's so easy to trigger people. I do think gold will have its day, just like in the GFC. Gold and silver rebounded faster, but I do believe they will come down with the markets as well. Let's look at silver. Silver, you got some more room to come down as well. You got overbought. Again, we were looking at a different trend line here, but a 2-year trend line. We had a multi-year Wyckoff on gold, a 2-year trend line here, producing easy trades where we traded all along here. These spikes above the trend line. We got our breakout. As you can see, we shorted silver. I posted this trade. $26, guys. Silver is at $22. People say $4. That's not a lot of money. Well, it is on trade. It is in futures. You do this. This is a 15% move in silver off my trade. 15% move. So again, looking at the larger structure here as well, what silver did, and we've been talking about this as it develops, left shoulder, head, right shoulder, okay? If silver loses the 618, 22 spot 28, watch 21 spot 23, and then you got your 1 fib, 100% retracement from the move, and 19 spot 902, okay? Very bearish right now. You've got above the trend line, fell below the trend line, retested, got above it, retraced, fell back below it. Metals are not looking good because the people that tell you that they're going up to these new highs, they don't understand the cycle. They may very well go up to new highs, but they're going to do what they did in the GFC first, which is dump, okay? Just be aware of that. Metals are heavily paper traded. Citibank and JP Morgan own 90% of the paper, okay, on metals, and they will dump this when the market dumps because they need liquidity. Looking at the NASDAQ 3-day chart, first time you got overbought here, trend exhaustion level on the 3-day, didn't even get there on the all-time high, not to the same degree, okay? So this is a major move in the NASDAQ. Again, you got well extended out of your Keltner channel. You broke your Keltner channel at 3 ATR. You got the retracement. Doesn't look like a lot right now in the 3 days. Let's zoom into the 1 day, but I want you guys to see this. Of course, this is a level I told you I expected it to top out, 15,000 up to 15,544. Okay, so this is where we got to. Now let's look at this on a daily and look at this a little bit closer here. On the daily, you can see more candles expressed this way, all right? So daily, parabolic rise up. Again, the big 7 or 10 stocks carrying this thing up. We got up here. This is exactly what you want to see, your topping structure. This is part 1 of your topping structure. Now, what you have in Wyckoff terms, you have your top, your ceiling, and if this candle holds up, obviously it's a daily candle doesn't come crashing down, potentially your base, okay? Your ceiling and your base. And now what you want to see is a retest of the ceiling, which again is this move coming back up. So if this move fails, say at, where are we at? 15,000, if it fails at 150 or something and starts rolling over, this is how you make a double top in the structure. And again, what would that simply be, guys? It'd be nothing more than an ABC move to make a double top. The problem a lot of people have is they watch or read a book on patterns, but really patterns are not that complicated in the marketplace. Patterns repeat over and over again. That's why it's great to be a pattern trader. I assess the pattern from a larger time frame. I carry over that resistance, zoom into a smaller time frame like the 1 hour. I'll trade with Fibonacci fractals. I'll look at different entry points. I'll look at classic patterns like double tops, head and shoulders, things like that. You have to be adaptive. Understanding how the market moves in waves, it all rolls back to Dow theory in the end. Long story short, it all rolls back to Dow theory. What's amazing to me, and I say this all the time when I'm discussing this with my trader buddies, Charles Dow, Richard Wyckoff, W.D. Gann all knew each other. Charles Dow used to have lunch every single week with Richard Wyckoff. And you think about the Titans back then and how their methods still apply today in a totally different age with algorithms, computers, quants. I mean, it's absolutely amazing. So, anyways, I just think that's pretty cool. Let's not digress, Brendan. Keep going. All right, NASDAQ. So I'm looking to see where this could retrace to. Okay. And again, simple fib retracement. All I gotta do is pull simple fib retracement from that local high to the low. I'm always looking at the 618, 786. So 15.1 and 15.190. See if the NASDAQ caps out there. But just like we talked about before, what does it have to do? The same thing. It's the same steps, guys. You get your ABC move back up. You want to see if this comes up, can flip your resistance of 15,297, hold up here, get a bullish structure, which typically forms as a Livermore pivot. You get a move up, a retracement, and then break that. That's your trigger point. Break that upside potential. Then I'd be watching 15,544 if it can do that. If it fails up here and any of our resistance levels starts rolling over, looking in a smaller time frame, it's a short. Okay. Very, very simple. Looking at the Russell. The Russell, just two great patterns so far on the Russell. So traded the Russell over here. This is a last big trade posted on the Russell in the Discord. Nice 17, 18% drop here in the Russell. But then we hit our 1618. Now, hesitant on the Russell because the Russell has been lagging. Obviously, the Russell was super weak at small caps, the broader market. Most of the rally was in the big tech stocks. Lots of people, lots of analysts that I trust as well that track things like rotation and things I have zero interest in tracking. We're talking about how there should be more money flowing into the Russell, and you saw it. You got the bounce up out of Wyckoff. Problem is you hit the 1618 at 1901. You've retested it several times. You threw a geometric pattern here. Price has descended here in a little Wyckoff structure below 1858. You're at 1852. Want to see the same thing if we get this move, right? Because then you just have the exact same macro structure, double top, and I'll be looking at Fibonacci resistances here. But the key one is 1901. I want to see if we get this move here for a lower high as the S&P and NASDAQ potentially recover. And if you do, then I'll be looking at entry points on the Russell. Let's talk about Tesla because it gave you guys this key target on Tesla. If we look on my screen, we have a geometric Gartley pattern that formed 268 was the target. We pumped up to, where did we get to? 276.99. You can see on the paper in the market, the money flow. You can see we got overbought up here on the exact candle, the 3-day chart, 3-day chart of the all-time high, the exact candle, and we got overbought again. The first time since the all-time high. And look what happened. So we got a retracement down all the way down to, where did we get to? 248. So we went below 250, got down to 248. So the 3-day chart, momentum still looks good, but this is your macro pattern, okay? And that's your target, 268. Price is at 263. Let's zoom in on Tesla. Tesla, what do you got for us? So on Tesla, you can see the paper. Once again, you got the MFI showing money leaving the marketplace. Momentum is rolling over, but you got the rebound. Topping structure. You see the consistency. I got Lee over there and Wales with the market tops, okay, on the thumbnail, because this is what you want to see. Parabolic rise up, hit some resistance point, imaginary, real. Maybe you nailed it with your Fibonacci layout. Maybe you nailed it with an Elliott wave, whatever, doesn't matter, right? Point is, hit your resistance. Great retracement, have a target 268. Price is pumping back up now in recovery mode, just like everything else, guys. Trading is not difficult. It is quite simple. The difficult part is being profitable, mitigating risk when you're wrong, because everybody's wrong, and managing your trades, your emotions, the psychology. But the market movements, they're oftentimes very predictable. Sure, FOMO can go on longer than you think. Markets can dump faster than you think and deeper than you think. But overall, patterns just repeat over and over again in the marketplace. So you look at this, guys, you got your recovery back up here. Again, 268 268 is the target. The 618 is at 266. The 786 at 270. So basically what I would want to do is I would want to watch this between 266, 270, see if we come back up here, find resistance for a lower high, maybe a co-equal high back up at 276. But as long as you got that blue candle, and this is heavily driven with zero-day options as well, as long as you got that blue candle right there, you want to see where you find that retracement. And then, of course, you would be making, and let's look at this on the 8 hours, you'd be making potentially that classic double top structure. That is just how you need to view these markets. Easier to see on the daily. And throw my trend-based fib back on here for your 268 target. You see that? So that's all we're looking at here, guys. Fibonacci structure, double top potential structure. And that's what I'm trading is that second top, if indeed we do make that second top. But just like everything else, you have your trading range, you flip your high, your 276, hold it as support, move up. Your trigger is going to be that breakout above 276, okay? Let's look at the JPN. JPN, the Nick. This is a JPN 225, guys. Long multi-year accumulation in Wyckoff here. And if you look at this, nailed the 1618, 33,607. This is a 3-day chart, okay? Multi-year. This is the Japanese Central Bank, BOJ, is doing yield curve control. So this is allowing assets to rise, finally defeating their 1989 all-time high. Okay, it allowed assets to rise, and you got some momentum up here. Hit a key retracement target, 33,607. Let's look at this on the daily. The daily, it's the exact same structure. Market tops again, okay? So you hit key Fibonacci level, and you have what could end up being a double top once again and further retracement down, or pivot above the 33,607, get above this, you pull back, typically have a trigger point and potential more upside. So let's look at this retracement. This looks like to me it probably got to the 786 if I had to guess. And you can see this. Let me zoom in. Just a hair shy of the 786 at 33,479. But that's your double top structure that you got going on right now. You want this to pivot back up to the upside and take out that high, pull back, and you can trade it to the upside. Conversely, this thing does our 3-point move or ABC move. You have the ability to trade this short, whether you can trade it at the top with the rollover or potentially a trigger from breaking a down fractal, okay? Just another way to view the marketplace. Let's go ahead and look at the French 40. Again, this is a trade this is something we haven't traded in a while because it nailed the top on the trade, gave you guys the re-entry point as well, had these nice moves down off my trades. And now I'm just watching this because it got above Wyckoff, got some supply dumped on it, tracking heavily, obviously, with the US markets as well. Came back down, got a nice demand wick, and you may be forming your double top structure just like that, if it does this, okay? And again, you already failed pivoting out of Wyckoff once, actually multiple times here in the stair steps, right? But if you come back up here, get your type of pivot, come back out, you have a trigger point, okay? And you can see if you can get upside. But hey, with the UK raising rates, with the ECB, I guess you guys call it hawkish. I mean, I don't know. It doesn't seem too hawkish to me, but ECB saying they're raising rates, watching inflation, it's still a problem. The bias is going to be when the rallies fail for everything to roll down. You did get a new all-time high, obviously, in the French 40. That's when we were trading it at the new all-time high. But you have a stair-step mentality going right now. Let's look at this on a fib retracement real quick. And the 786 is at 73.45. 618 would be at 73.01. Just exiting Wyckoff. So you want to see if you get a failure point there. Zoom into the smaller time frames, and that's potentially tradable. And obviously, you go through that with any force, let it hit resistance, pull back, and then you can look at it from a pivot perspective or a new double top. The DAX, guys, the German 40. Again, we haven't traded this in a while. We did have some trades on this early on. Came back up, obviously, and it went to, I think that was the new all-time high, right? New all-time high, 16,426. Sold back off. Nice demand wick. Let's just see what the DAX could do in this Wyckoff trading range. And you can look for this at 16,187, 16,292. I'm not overly interested because the American markets, with the rates being the way they are, we're at a key topping structure, fracture point. These other markets, the European markets, this is something that if the American markets continue to rise, they defeat their topping structure and move up, Pivot to the upside on Wyckoff, I'll be looking at these to see if they can move up as well. But conversely, if they start failing in their topping structure, then I'm going to be looking at these as well to see if they start failing. So really, this is just the middle of the Wyckoff range. Not interested in anything here. Perhaps you can find something in a smaller time frame. NVIDIA, and we'll start wrapping this up. Long video today. NVIDIA, let's look at this. So we talked about NVIDIA wanting to be on top of Wyckoff. You can see NVIDIA got on top of your Wyckoff trading range and is doing its pullback right now. Okay, you have your pullback happening. Open this up so you can see this. You can see your pullback. So you exit it out of your Wyckoff range. Here's your pullback, right? That's your pivot. So again, trigger to the upside. I personally think, my opinion, my channel, my opinion, if you're chasing NVIDIA at 431, you could be right short term, but I think you're going to be in for a world of hurt when this thing comes down. Okay. Massive gaps to fill, way, way overvalued, big FOMO rally, but that's the pivot. If it fails on this pivot, you're making a double top and re-entering this range. Again, carrying that theme through all of the different assets we're looking at. So you need to watch that. Let's look at Palantir. We gave you what I thought was the top when we hit it, the 2058 at 1710. And for now, that is the top. And Palantir is down at 1415, fell below its 21-day trend. If Palantir does recover as well, pull a simple fib retracement, watch for a macro double top structure to form. Okay. Again, nothing more than an ABC move for Palantir if it decides to do that. This is a FOMO stock. You still got a lot of paper in this market. However, momentum heavily dying off. The FOMO is fading on Palantir. Apparently, it's not going to save the world this year. So you're going to have a retracement. Amazon, we hit our target of the 1272, 129.55. Amazon still performing well, getting some retracement now as I'm talking. You got paper leaving the marketplace a little bit. Momentum's definitely dying off. But Amazon, like I said, if all these stocks carried up the market for the vast majority of the gains, these handful of stocks, you want to see what they're doing. Apple's the best one of the bunch, okay? Apple here on the daily, again, you're putting in what could be a double topping structure or could just be another breakout to the upside, still elevated above its 21. And if you look at Apple, again, we got up here to 176, great retracement down. What's the momentum and everything? You got paper, you got a little bit of bearish divergence developing on the daily. Again, you can still move up if you have bearish divergence. Just is what it is. It's just something to pay attention to. Volume still in the green. You still have interest here. And momentum, which I can't see. Let's get rid of this. Momentum is, where is momentum is starting to fade off a couple of clicks here. So we'll see. Not interested in Apple again. I think you're chasing the top. Could it go up a little bit higher? Sure, but you're chasing the top. Google's the weakest one that we were examining. Back up here, I told you this looked to me like it was going to lose its trend, right? And then it closed below, and now it's definitely closed below and is rebounding back up. 122.90. If I look at this from a Wyckoff perspective, throw this in the top. Throw this in a fractal base here. You're down thrusting here, basically at the 120 range and trying to get a rebound. But what you've done in a macro TA perspective is there's your high, lower high. If this rolls back up, say maybe gets rejected at the 21, made another lower high, and you can look for this to roll over and move down more. Important to track these because of how they track to the marketplace. Long video. I hope you guys learned a couple techniques that you enjoy. Consider checking out our room to trade with us, watch our TA live streams, and just be in a fantastic community. Again, you can message Lee in the Telegram if you have any problems with anything, joining the room or with downloading the exchanges or whatnot. And guys, hope you have a fantastic day. I will talk to you in a fantastic weekend. Next video will be early next week. Once again, could be a Sunday, Monday, Tuesday. It will be a surprise. We shall see, guys. I'll talk to you guys then. Take care, everybody.